This is Alan Bush with the Daily Financial Forecast for Tuesday, January 29th. Starting out with the stock index futures, we are seeing a fairly good performance today with futures higher. Looks like there is some optimism ahead of the U.S.-China trade talks. Also, we do have the Federal Open Market Committee meeting today and tomorrow. And it does appear that there will most likely be no change in policy, although traders will most likely be focusing on the press conference from Fed Chair Powell. Of course, that press conference and a statement will be released tomorrow. Stock index futures, I'd have to say, are performing extremely well, especially at a time when so many analysts are talking about how weak the economy is. Recently, we had the World Bank downgrading the global economy, the IMF doing the same. And yet, quite a few markets are performing extremely well. And it's not just stock index futures. Also, the industrial commodities have done well, bouncing off of lows. And that would include the crude oil and the copper. All of this suggests that something more may be at play, helping these markets. And I think that is a sooner rather than later resolution to the U.S.-China trade situation. That would suggest higher prices for stock index futures, especially since this market can ignore negative news that we have seen very lately. Moving over to the currency markets, traders are, I believe, evening up ahead of the FOMC meeting today and tomorrow. Two markets that I do favor, the Australian dollar and the Canadian dollar, which are called the commodity currencies, so to speak. These markets, currency markets, have performed well in light of increasing values for the industrial commodities. So I would trade these two currencies from the long side, the Canadian dollar and the Australian dollar. Interest rate markets, I believe, will probably drift lower near term. Technically, it looks like we may have topped out temporarily. So I would trade the interest rate markets from the short side, especially the 30-year bonds. I'd be only lightly short these markets. However, a more moving market is the gold market, which has now advanced to 8-month highs. I think inflation may be coming back, not right away, but I think there is some indications that this will become a problem down the road, and it is already being reflected in higher prices for gold and silver. So these two markets, I think I would continue to trade from the long side. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.